Welcome to the weekly market recap for the 22nd through 26th of June. We are going to be going over every single day, the price action, what entries were available to take, what fell under A+ criteria, what you could have possibly faded. We're going to really go in depth for all of these. I'm going to be trying to do these every Saturday or Friday, depending on my schedule. But let's get into it. We're going to start on Monday, and then we're going to just chop through every single day. So for Monday, when we look on the higher time frame, we were obviously trending bullish. We had a lot of rejection on the 4 hour. We see this last 4 hour gap getting closed past, completely disrespected. And then on the 4 hour over here on ES, we were a little bit lower, but still we were holding some bullish structure. It gets more clear on the hourly here. On the hourly, what is bullish structure? It is when you are respecting bullish gaps and disrespecting bearish gaps. What is bearish structure? Respecting bearish gaps, disrespecting bullish gaps. So we see that here. We are just reacting off of these bullish gaps over and over again. We're seeing high time frame market structure shifts from these levels right here. Everything is coming together to see what we want to see to have a overall bullish market. But we also need to pay attention to the opposing levels because we are day traders. We're not trying to catch these long swing moves. At least I'm not. I am reacting off of the most recent level where money is entering the market. So on the hourly, I have talked about this concept in my trade recaps already. The LFVG is so strong. It is the last fair value gap that is left, or the first one that is made on a strong move of shift in market structure. So once again, we are definitely in a bullish trend here, and we see this massive displacing down moves, shifting the market structure, and we confirm market structure right here, creating swing lows until recently we have switched back on the higher time frame. So I am expecting this 1 hour LFVG to hold and us not to send to this high resistance high, this strong high. I expect this high to hold. On the 1 hour on ES, it's really just a lot of noise. All of these highs right here are noise to me. I do not care about any of those. The only high that I was wanting to possibly see get taken on ES if we were going to be bullish was this 4 hour internal high. The reasoning why is we tap into a strong displacing fair value gap. We see that tap in strong displacing moves. That means that there is money resting at this high. So that is the only high I was looking for. All the rest of them are noise to me. Once again, bullish structure being shown here. So when we look at structure here, we tap into this hourly. We create a new leg here. We do not have any hourly gaps, but we do open up a 30-minute. The 30-minute is kind of, so I have higher time frame, conditions time frame, and entry time frame. My higher time frame is the 4 hour and 1 hour. Conditions time frame is the 15 and 5 minute. Entry time frame is anywhere from the 30-second to the 5-minute. The 30-minute kind of lands in between that. It kind of can be my discretionary time frame between the conditions and the higher time frame when it's not showing an opportunity. But most of the time, I want to see a 1 hour or 4 hour to get tapped into once we have seen a new leg. But we're going to go over the entry that presented itself and why I would have taken this live in the market. I did not trade on this day. I was moving. I just got back from my honeymoon. A lot of stuff was going on. So a lot of these days I wasn't even trading. So this is some of my first times looking at it as well. When market opens, we immediately manipulate into this 1 hour LFVG. This is a very strong indication that we are going to leave this trend line of low resistance lows right here on the lower time frame. What the frick is that? What did I do? I've never seen that before. Okay. That we're going to leave this low resistance lows on the lower time frame leading up to this 30-minute high time frame gap, and we could possibly see manipulations. So when we are on the 1 minute, there is not a fair value gap that shows itself. This right here is the manipulation leg. I want to be looking for the highest time frame fair value gap to be able to look for a short in this scenario. So what we see is we get a full closure. Also, we see this change in state paired with the closure. Why does it keep doing that weird line thing? I've never seen that before. So in this scenario, I would have gone short. We see V-shaped recovery. We have a very, very, very immediate draw on liquidity to go break even at. So would have taken this short. In this scenario, it took out that 30-minute fair value gap and would have got stopped at break even, because 1-to-1 is the lowest I will be willing to take my profit at. Would have been break even to that 30-minute and a break even trade. So that was the first opportunity. The rest of the session, in my opinion, until 11 o'clock is very, very noisy. I'm going to break it down why and all those things. So we take out these highs over here on ES. I already explained to y'all these are noise to me. I'm not going to be wanting to play off any of those until we reach this high. I'm not going to take any shorts anymore from this point in the market because we've already reached the last short level until this 4-hour internal high that I would want to play off of. And now I am going to be looking to see if we are going to interact with any bullish levels to continue our bullish high time frame trend. So we're going to skip forward a little bit. So I want y'all to not get trapped in consolidation phases. And this was a perfect opportunity to show y'all how you can spot early signs of consolidation. So we have an hourly level and a 30-minute level here. We tap one and reject to the other. As soon as we tap it, we reject back to the other one. Y'all, this is a sign that we're going to see some bounce back and a bid between buyers and sellers here until there is a winner and a breakout. So that's exactly what happens. We tap it again, we reject, tap it again, consolidate, reject. I do not want to be trading in any of this because it is uncertainty of what the bid has won basically. This is, to me, is a complete war in the sellers and buyers. I want to have clear direction to be able to have an A+ entry set up for my specific strategy. So we eventually see that sellers have won this bid. This up here, I am not willing to take an entry off of. 2 reasons. I view it as consolidation and chop. And second, we are in overall bullish market structure. The reason I was willing to take this is because there was real displacement, real movement, and we had a very easy way to go break even. Break even is a win, y'all. So we ended up, once again, we come back down to a 1-hour LFEG. This is the first fair value gap that is left in this new leg of structure. Let me show y'all ES a little bit too. I'm gonna go on the 5-minute on ES. So we see us create a little bit of structure here. We tap this 1-hour internal low. We see a little consolidation, but it does not hold us higher for price, so we can just get rid of that on the chart. And we tap into this 1-hour LFVG. We start consolidating. We create a very strong displacing move. A lot of people could view this as an accumulation, manipulation, and then distribution. We leave a 1-hour, not a 1-hour, geez, a 1-minute fair value gap, which is the highest time frame fair value gap in this leg. You can go to the 2-minute. You can see there's nothing there. So the 1-minute is what we're going to want to play off in this situation. We see rejection wicks at the bottom. This is very important for an A+ trade. It kind of plays on order flow without an order flow book. This is a seller exhaustion, and then we see 2 very strong closing bullish candles with no opposing wick that are also inversing this gap. Once again, reason why this is such a strong trade. We have low resistance liquidity right here on the lower time frame. At this point, you could enter into this trade, put in your stops under this body or the wick, depending on your strategy and how risk tolerant you are. For me, I probably would have put under the wick and targeting this 15-minute fair value gap. 1 hour to 15 minutes, external to internal trades in this situation with the overall high time frame trend are probably one of the highest win rate trades that I have. So this is a very strong A+ trade in my opinion. We have that same 15-minute over here on ES right here. So this is going to be a very interesting trade to break down because this comes down to a individual trader's discernment if this would have been a break even or a winning trade for you, and I'm going to show you why. So we get moves up, and on ES, we take out this 15-minute without taking it out on NASDAQ. Me personally, because I do not like to exit my trades early for psychological reasons, I probably would have just moved to break even because I've hit a break even level. The 15-minute, I probably would have not taken profits, just being completely honest with y'all. So I would have been break even on this trade and been stopped out of break even. Now, if you view this 15-minute and us creating SMT off of that and you want to take your profits, I'm not saying that's a bad thing to do. I'm just saying for me personally, I like to be able to wait for my stop loss or my take profit to get hit. Do not mess and adjust those things, because that can lead to bad psychological habits in trading for me personally in the future. So I would have been stopped at break even. Eventually it just chopped around and went all the way down to the stop loss. Yep. So this was right at 11 o'clock. I do not take any trades past 11 o'clock, but there are some days where I see this move happen right around or right before 11 o'clock hits. The macro time frame window for me is 9:30 to 11. So yeah, this is discretionary if you would have taken profits because of ES already hitting or not. So yeah, overall market recap on this day is obviously we had reactions off this 1 hour LFEG, but obviously we could also see that the higher time frame was still going to hold and give us an opportunity at least into an internal level. So for me, this would have been honestly 2 break evens, not a 1. This is Monday price action also. But yeah, so let's move on to Tuesday. All right, moving on to Tuesday. This was a no trade day for me. And I'm going to show you guys why. On the 1 hour, of course, I'm going to show you all why this is a market trade recap. On the 4 hour, we are just overall bearish on every higher time frame. We filled the new week opening gap, which can leave speculation that we are ready to possibly reverse, but I still want to be able to pay attention to structure. So we have this 4 hour, this 1 hour. The reason why I do not mark out this 1 hour right here, people like mark out every little fair value gap, is because if we reach this gap, I'm not going to want to take anything until we reach the higher time frame 4 hour gap anyways. So that's all I'm going to mark out. This is a 4 hour internal high, meaning that we tapped into that and we see some type of consolidation rejection, meaning that level could be holding some power and resistance in the market through money. Once again, we have that same 4 hour over here. I did mark out this 1 hour because of the fact that we generated liquidity under it. But I'm going to be really quick through this day because like there is, in my opinion, I follow an A+ trading checklist, and nothing that presented itself on this day fell under that criteria. So market opens, we whip down, not into anything of importance for my strategy. And we just move higher into this 1 hour fair value gap. Now, if we would have inversed this 1 minute gap with the SMT off of these highs, after having high time frame manipulation into a high time frame level that's in line with market structure, I would have definitely taken that. But we end up tapping back into the hourly on NASDAQ, tapping into that 4 hour on ES, and the market did not give any entry to go short, in my opinion, off of this level. This is nothing I'm willing to take a trade in. This is noise, consolidation. Everything in here is, if you take a trade in this as a beginner, it's whatever. You're learning. Past that, if you have accounts, do not be putting your capital in this crap. This is stupid. 100% stupid. And I am not willing to take, this is another thing too. I'm not willing to take longs anymore. Reasoning why is because we are in a high time frame level. Just because we tap into a 15-minute and get an inverse does not mean that we're going long. We have to look at everything aligning. We want to have the conditions and higher time frame align and then look for a shift that is in that direction on the lower time frame or entry time frames. So the only thing I would be willing to take in this situation after we shift here is a 5-minute fair value gap or a 15-minute fair value gap continuation, which it has stayed very choppy, a lot of wicks. We can look on the 5-minute here. There's nothing here to trade off of, a lot of noise, and we just go all the way down with some very choppy looking price action until 11 o'clock. So today, for me, none of this screams A+ or something I would want to put my capital on, so I stayed out of this day. So yeah, let's move on to Wednesday. Wednesday kind of falls under a similar situation as Tuesday. The only level I was looking for to get interacted with was this 4-hour internal high on both of these levels. Once again, reasoning why is we tap into an imbalance. We see very strong exhaustion and strong closing high time frame candles. If we would have came down to this level, I could have played off that too, but I just did not see price moving that far. This is where the day gets very clear. everybody was talking about this day on social media, and it's because it's bullcrap. We are in a pinch in the market. We have low resistance on the upside on the hourly and on the bottom. When days like this are happening, just stay out. Stay out. It will save you money. Don't try to force a trade on the 5 or 15 minute time frame. During this, wait for something to really happen. So how do I put this? Accumulation, manipulation, distribution, power 3 is a real model. And I definitely think that it's a strong model. But I think the distribution part of that, or not the manipulation part of that must be into a higher time frame key level. If we just manipulate without going into a level that matters, like a high time frame gap or internal high or low, so in this situation, if we would have accumulated, manipulated into this 4-hour internal high, that is a plus with power 3. But once we just get manipulations off one side or the other, in my personal opinion, that's not a secure trade anymore. We want to be able to see manipulation into a high time frame level for it to be a plus. So what we see here at market open is we rip up, once again, off of nothing that I am willing to take a trade off of. I think this might have been, yeah, no, it wasn't even a 15-minute internal low. So nothing that I would have been willing to take a trade off of. We do leave this 15-minute internal high up right here. I would not have taken a trade off this 15-minute. There's no way you're seeing me do that with all of this low resistance draws and liquidity above that. There's no way you're seeing me doing that. I do not care if it's available. It's not a plus. So we do end up having a manipulation of the lows, all the low resistance lows on the hourly time frame with bullish SMTs. The only possible entry that you could have taken was off this 30-second, but there's a major problem with this 30-second. You already interacted with a 5-minute level. 5-minute fair value gap on the 30-second closure of this 30-second IFVG right here. So I would have faded this. I did fade this because of that. I like to have a 5 or 15 minute as a guaranteed break-even spot for my trade. I would have targeted this 15-minute internal high if I did take it, and we never even returned to that, and we just chopped around. So this is why you stay out. You could have taken this. You could have just gotten break-even on it, but you're just going to waste your time. There's not even a reason to take a trade when you highly expect for it to be break-even anyways. You can try it on good days where there's actual key level involvement, but there wasn't even that on this day. So I faded everything on this day. It just was not anything that fell under my criteria for my entries and what I want to put my capital on. The rest of the session, once again, was just pretty choppy. We did take this low and ended up delivering a little bit higher. But by the time we interacted with this 4-hour, we already were past 11 o'clock. I don't even know if it played out. So we have 2 minute, 3 minutes. Oh, actually, too bad. I would have been taking it because timing. Highest time frame fair value gap on this manipulation leg is the 3 minute. Could have went short there because we had sponsorship on the 4-hour higher time frame internal high. These levels I mark out are strong. I don't mark out every high and low, and that's why I have a strong win rate. I can see a lot of the market through a lens of where money actually entered and where it is distributing and where the orders are resting in those areas. So do we have a 5 minute? 5 minute internal low. I didn't take this because once again, it was past 11, but I'm just giving y'all something to break down. So yeah, that would have been TP on that. There are a few times where I've taken trades like before 11:10 if I feel like it's a really strong discretionary setup. But this is A plus if it would have been closer to 10 o'clock. We have high time frame involvement with the overall market structure. We see generated structure on the lower time frame, get a resweep, and then the highest time frame inversion with an easy 5 minute target. So I did not take this, but it would have been available if you are willing to take a trade a little bit past 11. So that is for Wednesday. Let's move on to Thursday. All right, Thursday. I did take a trade on this day. The rest of the days I didn't trade because I was busy moving and all that type of stuff, and a lot of them were just not good price action days anyways. But I did take a trade today. So we're gonna break it down. I had to move to TradingView because TradeZella apparently doesn't have the data for back testing yet for Thursday and Friday. So going into market open, I was leaning short-term bullish. We were in this 4-hour gap, but I was seeing that we were creating a bullish market structure on the hourly. And I thought that because of the fact that we have been really just not seeing real displacement from this 4-hour gap, that we were going to see bullish movement. So I was actually bullish on the session, and I thought that the lowest manipulation point we would go would be this 4-hour internal low, because below that is a lot of imbalance, and basically price is unneeded to go there to take out further liquidity. But this 4-hour internal low was the lowest point of the day. We also had this 1-hour fair value gap right here that I was looking to possibly see a bounce off of into this 1-hour internal high off of this. Dang, one second. Okay. Off of this 1-hour gap right here. Oh, no, we didn't take it out. So yeah, we generated liquidity under that. And I was looking to see this 1 hour possibly get tapped into and trade lower. So I was kind of a mixed bias on the higher time frame, but I was willing to see a long short term into this 1 hour more preferably than the bearish trade from this level. But y'all probably all know it's about to happen on this. But we ended up just straight dumping, no retracement or anything into a 5-minute. So some people took this trade off of this 15-minute gap. For me, that's not very responsible for me as a trader. The reason why is this 1-minute gap was created before market open. There's a lot of money that enters at 9:30 that engineers these fair value gaps for entry points and reversals. This fair value gap doesn't really mean much to me for an entry. And also, by the time we took it out, we have already taken out 2 of the main draws on this low resistance trend line. So I completely faded that. So moving lower, we go into this, what was it? 4-hour internal low, where I was expecting to be the low of the day, and we just completely blew past it. So I was being very patient, really just setting up not to trade today. I'm going to be on the 15-minute on ES, just because that's the only time frame that matters here. Well, the 5-minute too, but we'll show the 5-minute for now. So this is that same 4-hour internal low as this 4-hour internal low right here. We see this 4-hour LFEG right here. We tap into it, and that's what shifts the market structure from bearish to bullish on the 4-hour. Very strong low, very strong. I already did a trade recap for this day, but this is a very strong low, and that's why I was so eager to take a trade off of it when I realized that we were delivering to that level. I just didn't expect us to go that low in this session. But we completely manipulate all the way down. We take out that low right here on ES. It's not back tested. I don't know why it won't let me right now. But we take out that low. As you can see all the way through down here, we did not even tap into a single 5-minute. There was no point where I was willing to take a trade lower. I want to trade to a 5 or 15-minute to take continuations, which are my condition timeframes. So we do leave this first initial 5-minute gap right here. And then this 5-minute right here. Also, I did not mark out this 5-minute because I was willing to basically disregard that level because of the higher time frame move here. I like to use 5 minutes at break evens, but when we have a very strong high time frame move that I see developing, I'm not going to freak out about 1 5-minute. But there's been days where you're kind of in a toss trade. That 5-minute is very important in that decision. So we see us take out that low here on ES, and we stay above it on NASDAQ, creating a SMT. Then we continue to confirm with generated low time frame structure. If we were trying to trade off of this leg, that would not be A+, but we pull back, have a resweep of this low, and then we see us seeing some movement forward towards a entry. So my entry is based off of the inverse fair value gap. highest time frame. The highest time frame in this situation was this 30-second. This is where I entered. I actually entered on this trade, put my stops below this candle. Also, it was paired with the change in state delivery right here. Very strong closing candles. I love to see that. And I just targeted a 1-to-1. Reasoning why is just because we had so much movement already in the session, meaning that a lot of money is already stepped in and could possibly be getting ready to exit because we are at the bottom of the day. When that happens, I expect market to be a lot more choppy and consolidated for the rest of the session. So I took this entry. I went break even at this 5-minute, and then it did run to a 1-to-1. What you could have done differently on this trade day was to leave a runner for this 15-minute gap on ES, and same 15-minute that is about to get opened here on NASDAQ. So we do end up going higher into that 15-minute, not that one, this one right here. So once it tapped out, you could have closed a runner. I didn't. Like I said, my reasoning why was just because we already had very strong volatility and displacement, and I was expecting the market to get choppy pretty fast. That is what it ended up doing eventually. After we tapped into this 15-minute, we definitely started go barcoding and didn't see any more real movement for the rest of the session. So I did take a secure dub on that day. Overall, good price action. I mean, we saw money. That's what we want to see when we're trading, is money. That tells us that we have something to trade with and play the market with. It gives me more confidence and real movement and delivery to my take profits. So yeah, overall, a pretty good day. This was an A+ entry with the high time frame sponsorship, with an SMT, low time generated structure, strong inverses, easy point for break even. Everything checked the box. So I actually did take this trade on this day. So yeah, that is it. And let's move on to the last day, which is Friday. All right, Friday, last day. I ended up taking a loss on Friday. The reasoning why was mostly just price action, but I could have done something different. I am always learning and trading, and I'm going to try to enforce that to you guys and show you guys every single time I learn a new thing about what I could have done differently. So on the 4-hour, there was really nothing I was seeing besides this 4-hour internal high. We were overall in bearish market structure. We are reacting off these bearish gaps over and over again, confirming that we are going to be in a bearish market structure. To the downside, the only thing I had to view as a real optimal target were these relative equal lows. But I was honestly further bullish to these highs up here, but we recently have reacted off of a daily 4-hour gap. Not daily 4-hour gap, a daily fair value gap. Goodness gracious. So I was bullish. I was bearish. Excuse me, y'all. To this low. Because of the fact that we already had sponsorship from a 1-hour gap right here, and we have not yet delivered to the swing low. So I was looking to catch a conditions time frame trade to this low. We already have sponsorship and we have not taken out the swing low yet. So I am willing to take a conditions level trade, which is a 15-minute or a 30-minute, anywhere in that ballpark. But we did tap into this 30-minute, and we got a sweep of the internal high and saw a really good rejection in pre-market. So I was really anticipating some strong bearish moves into this Asia low, which is a swing low in this situation. So we tap into this 15-minute pretty much right before market open, and then we manipulate lower. So once that happened, we left a 15-minute internal high right here. Okay. And we come back and create structure. This is where I went wrong today. I viewed this right here as a pullback in creating low time frame structure for an entry because we are already sponsored by this 15-minute. I did not use one of my rules. If we tap into a 15-minute, 5-minute, 1-hour, 4-hour, any type of level in pre-market, I do not use that level as a trading sponsor. The reason why is right at 9:30, a whole bunch of new money enters the market. So I do not trade anything that is already used in pre-market and been tapped into in pre-market. So I was this very strong expecting delivery because we generated liquidity above this high right here. So I was viewing this as structure. I shouldn't have. And I'm telling you guys that now so you can learn from my mistakes. I saw some exhaustion at this high right here with this key. So I was willing to take this 1 minute inversion right here. We got that close. I took this entry. I put my stops above this wick right here. And I was just targeting 1-to-1, going break even at this internal low right here. And what ended up happening was we ripped up. So what I could have done to avoid this loss, because I want to show you guys what I could have done. If we went and took out the 15-minute intermediate high. Wait, did we take it out on ES? Wait, hold on 1 second. I'm trying to remember all that happened so I can give you all the proper information. One second, y'all. Bear with me. Okay, no, we didn't. So yeah, what I could have done to completely avoid this loss is sit on my hands until we actually swept this 15-minute intermediate high on ES or NASDAQ, and then saw structure get built with a real inverse. That could have completely avoided this loss, but I decided to view this as structure, which was the wrong move. I was just very expectant for the move, and that got control of my emotions, and I ended up taking a trade that did not follow my A plus criteria. But resweeping this high would have had sponsorship past 930, and would have been grounds for a trade. So if we would have swept this and then saw this inverse, that's A plus, because we already had a 1 hour high time frame sponsorship at this fair value gap that did not yet deliver to the swing low. So yeah, took a loss on that day. I'm going to break down what ended up happening for the rest of the session, and I'm going to teach you guys a valuable lesson. So we do end up taking out that 15-minute intermediate high, and delivering into this, I think it was a 4 hour, yeah. 4 hour internal high. So I'm going to teach you guys a valuable lesson before I show you this. Once you take a trade that is A plus and it fails, what that means is that the market movement for that day could not be respecting your trading edge. 1 trade a day is enough. Once you take a loss and it's A plus, be okay to just fall under the probability of your win rate and move on. And most likely not trade that day. Sometimes you got to pay for information if there's a stop raid and there's a perfect structure built after that and an inverse, whatever. But today in specific, what is this? Straight consolidation. Consolidation between 9:30 and 10, which is the most prime time of the market. I think Trump spoke on this day, and that is probably one of the reasons why we had some very slow movement leading up to the speech. But what ends up happening again, because this is an A plus entry. We sweep out this 4 hour. 1 second, y'all. There it is. We sweep out this 4 hour. We create low time frame structure and then get a 1 minute inverse. This is a perfect trade on a normal conditions day. But you have to be able to realize when your edge in the market is not playing the way that you should see it be playing to be able to have the willingness to put your capital on it. We had a perfect perfect 5 minute internal low. English is not my strong suit, if y'all have already told. There you go. 5 minute internal low as a break even point. This right here, in my personal opinion, is A plus, going break even at the 5 minute and is targeting a 1-to-1. It completely disregards it, has some whack candle. And then after that, the market is just straight choppy. No entries in this. So once you see a trade that in most situations, most days the price action should have played out, it doesn't play out. That means that the market could be disrespecting your edge. Your edge is not perfect. Your edge is not supposed to win every day. That's not what trading's about. You have an edge that has a probability. For me, it's like 70 to 75% win rate. That means that on those days where I see that, which is more than not, I am willing to put my capital on it. When the market is in that 30% of the time where it is not delivering the way I see it for my edge, I need to be able to not trade and stop. Once I take one loss, don't get mad about it and angry and try to revenge trade. That's how you end up blowing all of your accounts in one day. So do not prolong your progress by being emotional. Be okay to realize that you're in a game of probability. If one day does not show you the movement you need to see for your edge, turn your computer off. Be okay to not trade that day. And this day, Friday, was a perfect example of that. This was A+. We did end up seeing a 2-minute inverse here, but this is not a strong closing inverse. All these candles are weak. We see wicks in either direction. It took 5 candles for it to inverse. All of that is pointing towards to stay off the charts, let it go, come back tomorrow. 1 loss is better than 3. And also 1 loss is better than taking several break evens after that, but still practicing over trading, revenge trading. So practice your psychology and use it as resilience. Today was a perfect day of being able to pay for information and know to stay off the chart and not trade for the rest of the session. So yeah, that is it. That is the weekly recap. I hope you guys enjoy this. I am still learning about how I want my process to look with content. So bear with me as I'm learning, as I am adjusting the way I want to give it to you guys and have it so you guys can receive it in a real way and soak in the knowledge I have. I'm learning my wording, all that type of stuff. So stick with me. Hope you guys enjoyed this video, and I will catch you guys on Monday. Peace out. And God bless y'all. Stay in prayer. Read your Bible. I'm going to do, hold up. I'm going to do one more thing. Psychology wise, the biggest thing that will change your trading is to put your trust in Jesus. Read the Bible. It is the best sauce for trading psychology, is the Bible. Teach you about your discipline, teach you about wisdom and patience. I am a Christian. You guys already know that. But I'm telling y'all, without Jesus, without the cross and the Holy Spirit guiding us through trading, it is a lot harder to become successful. And people are successful without the Lord, but for what cause? You know what I'm saying? So get in the Bible, stay in prayer. If you haven't read the Bible before, or if you've been thinking about Christianity, you never have, and you're kind of on the edge about it, I'm telling you, just give it a shot. It doesn't hurt for trying. I used to not believe in the Lord. I used to not follow him, and I had a radical experience. And from then, my life has drastically changed. I found trading afterwards. I stuck with it through a lot of trial and error. I found the love of my life when we got married. The Lord will bless those who seek him. So seek him. But yeah, that's it. I'll catch y'all next week. Peace.